people think that Bitcoin has gotten too expensive. And I say expensive compared to what? It's certainly expensive to where it was a few months ago at 50 or 60,000, but it's so cheap compared to where it will be in a year or in 5 years from now. I would say maybe within a year, certainly within 24 months, the banks will be custodying Bitcoin and potentially even selling Bitcoin. We're talking about institutional FOMO, and we're talking about sovereign nation state FOMO coming in. FOMO, and I mean, we're setting up for fireworks here.
Bitcoin's current price might seem expensive now, especially compared to where it was just months ago. But according to seasoned entrepreneur and investor Mark Moss, it's still incredibly cheap compared to where it's heading. Within the next 12 to 24 months, Moss predicts we'll see banks adopting Bitcoin, potentially even selling it, while institutional investors and sovereign nations jump in, driven by FOMO. With the newly elected U.S. President, Donald Trump, expressing a positive stance on crypto, his administration is likely to lead this transition. As the U.S. moves toward becoming a Bitcoin-driven nation, more countries are expected to follow, driving the crypto asset's price to parabolic levels. Let us now watch Mark Moss as he explains why Bitcoin's rise is just getting started and how its price could soon skyrocket. Give this video a like to show your support, subscribe for your daily dose of crypto news, and let's begin.
A lot of people were disappointed in the price of Bitcoin because it was basically stuck in a range for like 6 months. There's a lot to say about that. One thing I would recommend, I constantly try to remind people of is, so this was, August, September-ish, right? Before the price really started moving, is I said, look, it hasn't gone anywhere in 6 months, but it's up 150% in 12 months. Like, that's pretty dang good. Like, from a macro investor like me who's been doing this for a really long time, 100%, 150% in 12 months is amazing. And so, number one, zoom out, man. Like, if you're expecting your assets to move inside of 6 months, like, you're just never going to make it. And another reason why they were getting disillusioned is because we saw the assets starting to pump. So the stock market was still holding up. Gold was taking off, making new all-time highs. We saw global liquidity going up, but yet Bitcoin wasn't moving. And typically, Bitcoin is like this most sensitive asset. And a lot of times it starts to front run. It's like this canary in the coal mine, if you will. But Bitcoin was lagging the liquidity and the gold moves. And I made some videos and kind of broke down some charts and showed that there's, up to about a 6-month delay. And I think that's where we're at, right? Bitcoin caught up. It made its big move. It was a little bit behind the curve a little bit. And here we are. Yeah, we're blasting off, right? The gold demand is not because you and I are buying more gold jewelry, buying gold ounces for our safes. It is nation state demand. And really, that was a big driver of gold. And yes, to your point, it's going to be a massive driver for Bitcoin. I think I made an off the cuff video that went pretty viral, just saying, like, people are not bullish enough. I don't think the market has front run this. And that was like a week or two ago. But I do think the market is now catching up to this reality that we started to see this like institutional FOMO, if you will, back in 2021. And it's been going, and we are seeing the institutions starting to FOMO in. The problem is it takes a long time for the institutions to move, to change their fund mandates or the legal compliance, things like that. There's reasons why institutions can't move in because there hasn't been a functioning options market and things like that. But now we're starting to see the sovereign FOMO. And the key to what I was saying, why people aren't bullish enough, and I think they're just catching on, is because what we saw with El Salvador, being one of the poorest countries in the world, when they adopted Bitcoin, it wasn't like they're influencing a lot of nations. Like, nobody's really paying attention to that. But what's happened in El Salvador since, right, turning their country around, taking care of crime, massive amounts of influx of investment capital coming in. And now at Bitcoin, when Bitcoin hits $100,000, El Salvador is able to pay off their IMF debt. It's never been done before. That doesn't happen. The IMF debts are strategically made in a way to keep those nations enslaved forever. And when they can't pay the debt, they just add more debt to pay the old debt. And so to pay off the IMF debt is insane. And now, again, they're not influencing the world, but they are influencing other small countries. So now Bukele has been meeting with other heads of small nations, Omar, Sudan, UAE, etc., and they're starting to move on Bitcoin. So we're seeing that. That's like the bottom-up approach. But if the United States, the global homogeneity, the US dollar, the reserve currency of the world, if they were to take on a strategic Bitcoin reserve, then every other nation is forced to do so. It's the way that game theory plays out. So in the world of investing, just like most of the world, it's competitive. And if a fund were to add a little bit of Bitcoin and outperform the other funds are forced to respond to that, which is what we're seeing in the institutional FOMO. But if the U.S. does it, every other nation is forced to. We're talking G7 nations, G20 nations. I believe these other nations have figured this out. They didn't know what was going to happen on the election because obviously if Kamala won, that was not going to happen. But with Trump and RFK Jr. both running on this policy and a bill already submitted in and having a red wave through both the House and the Senate and the presidency, the likelihood of this going through is extremely high in my opinion. And the other nation states are starting to realize this. And word on the street is these nations are now FOMOing in.
Bitcoin is going mainstream, and Matt Huang, CEO of Paradigm, says nations can't afford to sit on the sidelines anymore. In a blog post, he compared Bitcoin to transformative technologies like gunpowder. Once it's discovered, you either adopt it or risk falling behind. El Salvador has already made Bitcoin a central part of its economy, and Abu Dhabi's sovereign wealth fund is mining Bitcoin. Meanwhile, in the U.S., Donald Trump has floated the idea of a strategic Bitcoin reserve, and Senator Cynthia Lummis recently proposed the Bitcoin Act to officially create one. Huang explained that nations that adopt Bitcoin early will benefit the most, locking in lower prices and gaining a strategic edge. Once major nations move, other countries will follow, and the race to build Bitcoin reserves will intensify. With over 30% of experts on prediction platforms already betting that the US could establish a Bitcoin reserve, the idea is no longer far-fetched. If this happens, it could trigger a global domino effect, pushing Bitcoin into the financial strategies of governments worldwide. Now, let's return to Mark Moss as he discusses further.
Yeah, we're certainly going to see a domino effect. And this is the beauty of the United States. The United States is not a democracy. Let's get that clear. We are a constitutional republic. And the key to this is really it's a decentralized form of government, right? So all 50 states are supposed to be independent. But the beauty of this is that it allows us to then try and test different things. And so we see these experiments playing out in real time, and this is one of those experiments. So we've seen already multiple states have passed laws to, for example, enshrine rights to mine Bitcoin. So as like New York has tried to be aggressive and ban Bitcoin mining, other states like Montana have said, no, you have a right to mine Bitcoin in Montana. Other states now have put other bills in place that guarantee your right to custody Bitcoin. And now the Pennsylvania one is now the potentially to put Bitcoin on the reserve balance of the state. And so certainly we're seeing this play out in multiple states in different ways. And if it works really well for Pennsylvania, like we hope it certainly does, then of course it's going to influence, back to that game theory, it will start to influence what the other states do. And it'll be highly contagious. Now, my guess, the red states probably go with that because they like to have a balanced budget and have a surplus. And the blue states probably continue to wreck themselves. But that's another topic. But I certainly do think this is the start of something really big. I think it's going to happen at the federal level. I mean, let's just talk about it at the federal level for a second. So, number one, RFK ran on this platform and laid out a very detailed plan of exactly how he wanted to do it. He didn't win the presidency, but he folded in with Trump, who also ran on about the same platform. So we have two people who see eye to eye that are now together that want to do this. But more importantly, Senator Cynthia Lummis from Wyoming has already submitted the bill. Like it's already going through the House. And we know that with a red House and Senate, and then obviously with Trump in presidency, it has a high chance of going through and getting signed. And even if it were to fail, we'll probably get another one that will go through. They're saying originally Senator Lummis said that she wanted to get it through within 100 days of Trump taking the presidency. Now they're saying it needs to go through even faster, potentially up to 30 days after. And I think it's going to happen on a federal level. And then every state will probably just move right into it. Right now, we have about 325,000 Bitcoin per year get created. Okay. Now we have the U.S. saying they would buy up to 200,000. We have Michael Saylor at MicroStrategy said that they plan to buy 42 billion over the next 3 years. Now, we don't know what the price will be in 2 or 3 years from now, but let's just take it at face value where we're at today. That means that Michael Saylor buying 42 billion just at today's current price is about 175,000 Bitcoin per year, so over half of the supply. Then you add in another 200,000 from the US. Now you're looking at more than all Bitcoin being created. Now, what's interesting about this is that Michael Saylor has proven that he is not a cost-based buyer, meaning he just buys on regular intervals, whatever the price is. But, the other thing is nation states are also not cost sensitive buyers. Nation states, when they buy, they just buy. They're not traders. They're not Wall Street funds, right? They're just going to buy. So basically, what that means is we have just two buyers, and we're talking about institutional FOMO, and we're talking about sovereign nation state FOMO coming in. But just these two buyers right here are committing to buying more Bitcoin than is being produced. And so what that does is it creates a floor, right? Supply and demand. Fixed supply, as the demand increases, they're buying more than's being produced. That means we have this steady, consistent buyer coming in. Then you add in the sovereign FOMO, and I mean, we're setting up for fireworks here. I think that, I mean, we're going to unleash the American economy. We'll have massive efficiency in government spending, which then again would lower regulations and sort of take that boot off the neck. I don't see how that'd be bad for Bitcoin at all. The reality of that is that unleashing the American economy is probably going to be inflationary. So people aren't going to like to hear that. I'm an inflation bull. I think the rest of this decade is highly inflationary for any number of reasons. And this would be one of them. It's going to create more inflation, which will be good for Bitcoin. And people are going to need a way to protect themselves from inflation. And Bitcoin is that. So if anything, I would say it's going to be good for Bitcoin, not bad. And most people think that Trump just lied and didn't get anything done in his first presidency. But here's something that gives me hope. So when he took his first term, he said that for every one new regulation that got passed, he would repeal two. One in, two out. Now, when you look back at the results of that, he actually got 2.5 out for every one in. So we have some precedents for this. It did work. He did exceed what he had committed to do. And he was under extreme pressure and fight from the government, if you will. And so now with Elon and Vivek, I mean, maybe we can get a lot of these regulations pulled back. I'm extremely optimistic about it. But I think there's a couple other things that are involved that are more involved in that situation. So yes, number one, institution FOMO is coming in. Gary Gensler out of the SEC. Maybe not. I mean, he's definitely been aggressive to crypto. And I know we talk about choke point 2.0, but he hasn't really been that aggressive to Bitcoin necessarily. Specifically, he's been more aggressive on crypto at large. However, for my fund, I have a fund called the Bitcoin Opportunity Fund. And as we raised money, we did have problems from our banks receiving money because Bitcoin was in the name of our fund. So, I mean, there was a tax on Bitcoin as well. So I'd say certainly yes. But I think there's bigger things at play with getting these institutions and banks in. So number one, a lot of these institutions, as I said, just take time. So it takes time for them to change their mandates and what they're able to buy. Number two, they can't buy physical, so they need to buy some sort of equity-based Bitcoin. So now we have the options. But what's really held back the big funds from jumping in is that hedge funds like my own and other much bigger ones than me on Wall Street, they will never take a position that doesn't have a predefined downside. Hence the name hedge fund. Everything is hedged, and so without a liquid functioning options market, these big funds have not been able to come into Bitcoin at size. They're not going to come in and put billions of dollars in without being able to hedge that. And so now launching this Bitcoin options, I think, is going to allow these big funds to come in. Now, back to the SEC specifically, here's my prediction. I would say maybe within a year, certainly within 24 months, the banks will be custodying Bitcoin and potentially even selling Bitcoin, and which is going to put a lot of Bitcoin companies, the Coinbases and the Geminis and the Swans in some jeopardy. Banking is very sticky, and the banks understand this, and they're not happy seeing all their customers leaving to go to these Bitcoin banks, and so they want to offer Bitcoin. Now, they tried to overturn the rule that would allow them to custody the asset, and it got all the way, I believe, to Biden's desk and got vetoed. And that changes. I believe that as soon as we get the new administration in, that gets resubmitted, that gets overturned, and they're putting Bitcoin on their balance sheet. I think then we'll see, like I said, them probably selling Bitcoin. I think we'll see Bitcoin loan products popping up, and all of that probably within the next 2 years.
With all of that said, Mark Moss strongly believes that Bitcoin adoption will snowball from state to state and ultimately reshape the entire financial system. With states like Pennsylvania leading the way and federal support gaining momentum, the domino effect can already be seen. As institutional and sovereign FOMO kicks in and supply remains fixed, Bitcoin is set for fireworks in the years ahead. At this point, it's safe to say the Bitcoin revolution is not just about to come, it's already here. Do you agree with Mark Moss' outlook? Share your thoughts in the comments section below. Thank you for sticking with us until the end of the video. Hit the like button if you enjoyed this discussion, and subscribe for more valuable discussions on building true independence through crypto. See you next time. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.